Welcome to the latest edition of the Shares If I Talk Shares podcasts. I'm joined this week, as usual, by my colleagues Steve Fraser and James Crutts. How you doing, chaps?
Hey,
Very
gents.
well.
Very well.
And another interesting week. I can tell you the FTSE is streaking ahead, up 2%, all of 2% this
Blimey.
week. Europe's up 1%, and S&P is flat, but bear in mind it was closed on Monday for President's Day.
Yeah.
Um,
And of course it's not opened yet. So
it
we've
hasn't
got
opened yet.
the Friday finish.
This is the futures are up small, but or were up small. They're now down small. But what's also interesting is year to date, FTSE is up about 7%. S&P, well, Europe's up about 4%. S&P is flat. Nasdaq is down 2.5%. What's working in the States? Small caps. Russell 2000 up 7% plus. So that's interesting.
Yeah, absolutely. Yeah. I mean, we've been talking about this kind of churn from US
Mm.
mega cap to smaller caps and away from the US markets and lots of routes have been discussed. I know James has been looking at emerging markets because that was seen as a really hot property for money exiting the US. Is that what you think, James?
Yeah, that's right. We've done a piece on the site which people can check out, and spoke to a few managers. And after the storming year that EMs had last year, the momentum carried over, and that they still think there's still value to be had there, with sort of valuations still at a discount to developed markets. Um, so we talked to a few experts there and suggest a few funds that people might want to look at and go a bit further in depth into two investment trusts.
Who,
Yeah,
who
some
were
good.
who were the sort of the featured investment trusts that sort of stood out?
Yeah, so we sort of went a bit more in depth on Templeton Emerging Markets, which is kind of the like the
Yeah.
big daddy, the original trust to look at the space. And we also do a bit more in depth work on Fidelity Emerging Markets, which has a bit of a
Okay.
twist in that it can do shorting. So also a bit of a distinct route into the asset class.
Yeah. Yeah. Great.
Yeah, and they benefit from well, as you say, higher growth, lower valuations, and of course the weak dollar's a tailwind.
Indeed,
Yeah,
absolutely. Yeah,
interesting
it's
part
good.
of the market.
Yeah, good for exports. And we
Yeah.
also have got some comments from Darius McDermott at Fund Caliber and one or two other investment trust managers who've sort of chimed in, given their opinions. So
Yeah.
Nice work.
I know it was quite interesting. One of the big sort of events of the week, I suppose, has been um, Elliott partners taking a big stake in the LSE. And we talked about this previously, but there's quite a lot seemingly going on behind the scenes. Ian, you've got some intel.
Yeah, we're getting a few more details, Steve, but you've got to bear in mind that a lot of this is speculation and it's Elliott leaking stuff to the press because there's no actual official statement. We
Yeah.
know they've increased their stake. We know they want the group to buy back 5 billion worth of its shares. We talked before about, didn't we, about them would they sell the UK stock exchange business because it's so small.
Yeah.
The talk now, so we're getting a few more details. Talk now is they might want them to sell TradeWeb in the
Yeah.
US
Yeah.
to raise the cash for a buyback. But we come to the thorny issues of buybacks because they really do polarize opinion, I have to
Yeah.
say.
Indeed, yeah. I mean, we spoke quite a bit about this in a previous podcast with Mark Northway of ShareSoc, and it's clearly a very in-depth conversation to be had about the value of buybacks versus
Big
dividends. And I
conversation
know
there.
corporates have tended to err on buybacks. They think it's easier to execute and cheaper to execute, but there's clearly a big pushback towards giving us some actual cash.
Oh, and I think the thing is that because investors are now used to it, if a company says it's not going to do one, you have BP who
Right?
said
Yeah.
they're going to suspend the buyback. This week we had Centrica who said, and for the same reasons, BP said they had really interesting projects they wanted to invest in. Same thing with Centrica. They said the opportunities ahead of them mean they need to
Yeah.
conserve cash. Well, our market doesn't like it. If
Yeah.
you
Yeah.
kind of reared on this diet of buybacks every quarter or every
Yeah.
year, then the company turns around and says we're not going to do them. You get
Yeah.
quite a
And
negative reaction.
this I think is a bit of a juxtaposition because companies are not known for growth. So Centrica and oil companies. I mean, they're very mature businesses. They're not growth
Yeah.
companies. So typically, surplus cash they throw off. They've got nothing better to do with it. So in the absence of having nothing better to do with it, rather than let it sit in the bank, they give it back to shareholders via either dividends or buybacks. But potentially they're suggesting that they've got better things to do with it. So there could be, if they can perceive a better return on investment, then of course that should be welcomed. But clearly the market is going, not sure about that, a bit skeptical about whether you can get a better return on investment. Maybe give it back to us.
So anything catching your eyes this week, guys? Anything else?
James?
Yeah, well, next week we'll be looking ahead to two other heavyweight names. We've got Diageo half-year results, which will be the first under Dave Lewis, who they kind of prized from Tesco, or was known for his work at Tesco. Yeah.
And there's talk today, wasn't it, about, rumours again, but about him maybe really shaking up the executive board, really clearly seeing that there are maybe cultural internal issues that need to be addressed at the very highest level. So that could be interesting to see if there's any confirmation of that.
Definitely, and he's got the nickname Drastic Dave, so we'll have to see how drastic he is when the final sense. I mean, also Haleon as well. I think the full year results are out next week, so that's had quite a nice run as kind of investors look for get more defensive names. So this is your Sensodyne toothpaste, Panadol painkillers, and that sort of stuff.
Speaking of defensives, of course, we've got Rolls-Royce next week as well, which has been absolutely blistering over the last, I think it's 3 years. It has been the best performing FTSE 100 stock. Last year it might not have nicked number one, I can't remember, but definitely the previous 2 years it was the best performing stock. It's just been absolutely bonkers. So that's certainly going to be well worth watching to see, is there more in the tank, or is this heading for a regress to mean kind of scenario?
Yeah, I mean, we have BAE this week. James wrote that up. Record sales. So if that's anything to go by, and what do they say, James? We're entering a new era of defence spending.
New era of defence spending. Yeah, so they're confident of growth for many years to come.
I mean, there are only so many parallels to be drawn there, though, because civil aviation, of course, is Rolls-Royce's really big, meaty market. So while they might get some defensive work, it's that civil aerospace space that really is going to dictate them. But when we're talking about next week, I mean, there's only really one story worth talking about. I mean, Nvidia's results will be after the bell on Wednesday. It's become such a dominant force. It dictates not just tech markets, not just AI markets, but potentially the entire equity global mood. Expectations are very high, looking at earnings growth of something like doubling year on year, revenue growth, something like 60% year on year. That's already baked into the numbers. But this is a company that constantly meets all beats. I think it's 13 quarters in a row now. It's effectively outstripped expectations. So it becomes, even if they meet expectations, it'll be seen as disappointing because it's not raised the bar that bit higher again. So you might wonder whether it's on a bit of a hide into nothing. But I did notice that the shares are flatlined so far this year, and that flatlining trend goes back pretty much to last summer. So the share price has pretty much done nothing when lots of other stuff has been moving around, going bananas, like your Palantirs and companies like that. So the PE ratio has really compressed. So people have got used to Nvidia's PE being certainly plus 30 and maybe being 40, even 50 times. It's currently on a 12-month rolling PE of 24. Now this puts it into a pretty kind of value growth kind of region of the market, and yet it's still delivering 60% revenue growth, doubling its earnings. So really interesting to see what happens after that bell on Wednesday next week.
Yeah, absolutely. I've got HSBC and Standard Chartered, a bit less thrilling, but they're up at the start of the week. We've got LSEG, funnily enough, middle of next week.
Right.
So obviously people will be that investor or the analyst meeting will be very interesting to see what they can and can't say. And also,
I mean, I did, Ian, it's interesting because I did pick up that it sounds like the key thing that Elliott want the LSG to do is just have a look at their portfolio and just reassess what might be worth keeping, and what are the crown jewels and what really isn't worth keeping. But it doesn't seem to be a real driving force to spin off the stock markets business, which surprises me, as you spoke about earlier.
No, what they want is they also want them to just make it very plain to the market that AI is an opportunity and not a threat.
Absolutely, yeah.
So we'll see what they say. The other one I'm looking forward to is Morgan Sindall, FTSE 250 company. Investors might not know it that well, but really high quality business, office fit out, urban regeneration, and I'll be chatting to CEO John Morgan on Wednesday.
Right, that's interesting because I mean I know it from years ago. He used to have an awful lot of work in the construction side of building social housing projects, for example, for
Yeah,
the housing associations and stuff, which doesn't really get much of a look in when we're talking about house building. It's nearly all buy build to sell. So social housing is clearly in great demand.
yeah. It's a good business. I think that, chaps, just about wraps it up.
It has been a busy
We're
week, hasn't
out of
it? It will
time.
be an even busier one next week.
It'll be very busy. Thanks very much for watching. I hope you enjoyed it. If you're watching on YouTube, please click like and subscribe. And as always, if you want to get involved, email us at editorial@sharesify.com. We'd love to hear your news. We'd love to hear your views on things. And if you want to come on the podcast, if you're a company or a fund or a trust, you're welcome. Just get in touch. Cheers.
Great stuff. Have a good
Cheers,
weekend,
guys.
everyone.